Morning, Steve Fried in Chicago with the morning grain comments. Well, it's an interesting day in the trading markets. Because of Hurricane Sandy, all the New York trading pits are closed. Washington offices are closed, so today we won't be getting our grain inspections or crop ratings, but more importantly, we'll be watching for the safety of the people in the Northeast as this storm hits somewhere between Virginia City and New York City with a pretty good wallop. So we'll be watching it pretty closely. From an ag standpoint, we just have to see how much crops are still left out in the fields and that may be impacted by the flooding. We don't think it's going to be a big number. We'll be watching that. Also, some of the index trading funds are loosening some of their positions because the trading pits may be closed for as much as 2 days. So we're seeing beans down about 14 cents, corn up 3, and wheat up about 5 cents. Some of the higher prices in corn and wheat has to do with that world prices of both corn and wheat are actually going higher. From the corn standpoint, South American supply of exports is getting low. From a wheat standpoint, we're just a little bit concerned about Australia crop conditions. Some of the rain that was forecasted for the U.S. Southern Plains has been reduced. And also in the Black Sea, there's less and less export offers. And so those things are helping the corn and wheat market. As far as soybeans are concerned, there's a chance some of the dry areas of north-central Brazil might get some rain later this week. Some people hope this is a change in the weather pattern. Before the rains, though, it's been almost record heat this weekend across those areas. So we'll have to see how that impacts their final supply and when that crop is actually harvested. Last week, Thursday and Friday, I was out visiting farmers in Minnesota. And most of those farmers had questions about the 2013 crop. I think they're already set on, at current prices, on how much grain they sold for 2012, and they're not probably going to sell anything until later down the road or at higher prices. But they're all trying to figure out a way to hedge against lower prices in 2013. Some of the numbers of higher acres, trend yields, normal demand shows a pretty big increase, especially in corn and soybean carryouts for that time frame. So they're already thinking about maybe buying puts out there to protect them against lower markets. As always, these are my thoughts and not those of ADM Investor Services or ADM, and have a safe and profitable trading day.
The Fed really wants to be perceived as independent and doing the right thing